It's Thursday, February 11th. This is The Street Live. I'm Katherine Ross, and I am, of course, joined by Jim Cramer. Jim, what are you watching in the markets today as we have earnings and jobless claims that did come in a little bit higher than expected? And, of course, you got your second Moderna shot.
Right. Well, I think that my mind is a bit of a jumble, but it's not from Moderna. It's from the notion of what happens when you get the second shot. Now, there's some disagreement, but shouldn't be any. It's 12 days before the total immunity kicks in, and that's done. My information is correct. But I do think that people feel that you're immune the moment you get it. That's not true. And this is 12 days after the second shot, but you immediately your mind changes, and you could understand why you think about the opening trade and the not opening trade, and you look at Carnival Cruise Line deal, and you see that they're paying almost 5% to be able to raise money, and you say to yourself, sure, well, you know why? Because people are probably booking cruises right now for a year from now because they'll have been vaccinated. It makes the possibilities seem endless once you're vaccinated. The idea that I have to do a show at home in quarantine for 4 days or 14 days seems fatuous. Because why should I have to quarantine if I wear a mask and I have a 95% immunity? I mean, at a certain point, we have to reopen for real once you've got your immunity. And we have to just take a chance that it's just a fact of life chance. And I feel that things are so much different for me psychologically. So I'm thrilled. Thank you to the people of Staten Island. Public health system there is excellent. The place I went to is a 24/7 tent. I waited 2 hours. A belligerent person was on Twitter today saying it smacks of elitist privilege that I got it. I'm 66 years old. I applied on a website. I waited in line and I got my shot. So, I mean, at a certain point, not everything is unfair in life. So I feel very gratified. And when I see, when I have my brain is you got to buy Boeing, because I think that what's going to happen is people are going to travel. That's your first instinct. I had a number of people talk, we're all talking, they sent me happy birthday, it's really nice. But spent a lot of time talking with people, and what are the things they want to do? They want to travel. They want to see their relatives. And I think that that's going to be an incredible theme. Right now, it's the reshuffling theme. We saw that with Zillow. They talked about that. SONOS is the nesting theme. We had Uber talk about the theme of right now of messenger and soon of mobility. You really have a lot of themes coalescing, and that's one of the reasons why the market can be so good, because we know that this awaits everybody. And if it awaits everybody and it's a lot of pent-up spending, then it's going to justify a lot of the moves of traditional stocks, not necessarily like the Tilrays of the world.
So another theme, perhaps, Jim, is dating. And before we get to Sonos and the other names you just said, I do want to ask about Bumble's IPO, because they did price ahead of its IPO range, pricing at around $43 when it was expected to price around $37, $39. In your eyes, Jim, is this IPO red hot for the millennial, especially with COVID? And would you buy
it? Yeah, I would. We're working on a piece on it. This is a very positive, very well-run company that is a gentle, and David Paver was talking about that, a gentle entrant into a business that is frankly an app. And it's a revolutionary app in the sense that it makes online dating. You can do Zoom online dating. It's a very safe place. This is part of a theme. Pinterest is safe. Twitter's getting more safe. There's a rebellion going on in terms of going after hedge funds, and there's a rebellion going on about going after hate, and hate is on the run right now. When I mention that to people say I'm a dreamer. I was talking to my friend Mark Benioff, and I was saying that I really believe that maybe we've seen the high watermark of hate, which was the storming of the Capitol, and that people want a reaction to that. And the consumer product companies, very interestingly, want to advertise in what they regard as a safe place. Obviously, since Facebook stock's been stalled, they don't think it's safe. Twitter, they think, is getting safer. And I think that an outfit like Bumble is regarded as being safe. And that has now become an operative term because of the way that we've had a level of tension in this country that people, I think, very much want to diminish.
And Jim, you mentioned Uber earlier. They did report earnings, and they were a bit of a mixed bag, but delivery came out incredibly strong. Now, a while ago, maybe last year, we were definitely in person for it. We talked about Uber perhaps selling delivery, but have they done enough for you to really enjoy this business segment again?
I like delivery more than let me explain. Delivery is not a great business in the sense that in the end, you're taking a product from one place to another. And unless you have drivers that you can leverage so that they can do 3 different dishes rather than 2 different dishes sending from a restaurant, it's not a great business. Now, they happen to have, they've consolidated the industry to the point where they can charge an arm and a leg to get the product to you. A lot of restaurants can bear it. I mean, it's a tax on the system to some degree for if you're a restaurateur, but it's great for the people at home. And you have to organize your restaurant to be able to handle it. And you have to be able to make certain foods that can travel well. So and they bought Drizzly, which has alcohol in it. So they have a very good rap. Dara's got a great rap on delivery. But the real business, let's not forget, is mobility. And you need to be able to have ultimately driverless cars to be able to make that model really work. Otherwise, it's just a good company. Is it worth 116 billion? Well, we know it's worth whatever the market will bear because, like the delivery business, there are only really Lyft and Uber for the mobility business. So during this period, there's been a lot of consolidation in the delivery business. Obviously, they bought Postmates. It was a very positive acquisition. We know that Grubhub got bought during this period. We know that DoorDash is consolidated with Caviar. So there's only a couple players, and they can raise prices with will. And that's a very enviable place to be in. But the question is, again, once everyone you want to continue, do you want to continue to not be evident and be at home? Or do you want to go out and get seen and be seen and talk with people? I think we're going to go back to wanting to go out again because it's something that we love in this country. It's what we do.
Jim, Zillow was your mad dash this morning, and we talked about housing stocks a couple of days ago. So I want to ask you directly, would you add Zillow to this list of buys?
Yeah, Zillow really had a very impressive quarter, and Zillow is developing. I'm working on this. Really, basically, it's $45 billion. A one-stop buy. They're working for a click. Getting rid of all the friction to buy a home, and it is a very positive call. And they've made a very big change in the model. And a lot of people doubted them. I doubted them because I don't want to own houses. They own houses, and I know that houses can go down in value. We learned that in 2007. But houses are going up in value, and houses are also with lower interest rates. And I'm very proposing it as the reopen economy, but also as part of the deurbanization economy. They call it reshuffle. And I think they did a remarkable job in the quarter. They're making money everywhere now, and that their Zillow issue, basically, where they own the home, fix it up. You want to sell your home. You don't want to fix it up. They'll fix it up for you. They'll send you a check. I like that. Very good business.
And if you haven't, Jim, you should check out on Instagram, Zillow Gone Wild, I think is what it's called. It's people looking up just browsing Zillow, they find these crazy houses for sale and they post them on Instagram. It's quite
Gone Wild, huh?
Zillow Gone Wild. Jim, another topic that we talked about earlier this week was what you spoke about in your No Huddle Offense segment last night on Mad Money. You focused on the semiconductors, and we hit on this chip problem yesterday, in fact. But do you think that the U.S. should now approach semis like we do with PPE, bringing the manufacturing back to the U.S. instead of outsourcing it?
Well, I think it's going to be a tough road. I went to the soon-to-be-confirmed Treasury Secretary, Gina Raimondo, who's been on the show a number of times as governor of Rhode Island, and the Commerce Secretary, and she completely agrees with me and wants very much to be involved in this. Now, I can tell you right up front, it's slim, okay? I am not underestimating the odds against this. A lot of the semiconductor companies don't really want to build here because they feel that it's cheaper to build overseas with less expensive workers. That's going to play a very big role. So the instinct that I have, which is to get jobs here and to build foundries, is going to have to be heavily subsidized because the U.S. just simply is not a great place to do business. If you're doing the kind of jobs, you can make a lot more money in Taiwan. The problem, of course, is that the interest of the semiconductor companies is not a geopolitical interest. They're a profit-oriented interest. And what you really want, frankly, is you want a leader like Liam Griffin, who builds his own foundries at Skyworks, which is what Intel used to do. Intel still does some, but it's desultory. We need leaders like Liam to step up and say, listen, this is how to do it, because he builds his own fabs. And the institutional resistance will be that that it's a short-term problem. It's not, because the chips that it may take 18 months to get the chips that people want. Second, that it's auto, and those chips are not really high tech, so why do we bother to help them? It's not just auto; it's all sorts of different companies. I mean, SONOS was talking about this. And then the next level of resistance is that the government should be involved in targeting any industry. Well, this is the most important industry there is because it's what everything runs on. And then the next is that we don't have any money. And the fact is you need a 50-year savings bond to be able to do it. And the next is just some cockamamie guy out here at TheStreet.com talking about it. And I have to deal with all those things. And you're not going to defeat me. Those who think that I'm going to go away on this, just the way I didn't go away on masks, and finally the CDC released the stuff that we were working on when we did our mask competition. And I'm not going away on the home test, which should be given by the government for nothing as we defeat COVID. I'm just not going away. And I know I'm going to lose. And it does not interest me at all that I'm going to lose. I don't care.
Jim, your stock trading caught my eye this morning. It was Sonos, and you noted that this is a company that's doing remarkably well during COVID. And I have to say that even my dad has been upgrading his home with Sonos simply because he likes the sound and the easiness of the system. So is the stock a buy not only during COVID, but also when we return to normal and we host people back in our homes?
I think it is. I mean, this is a showcase. I mean, I've been working on this notion of what's a showcase. Like COVID turned out to be a showcase for Zoom, and COVID turned out to be a showcase for Sonos. And Sonos is a very good stock. They really do a beautiful quarter. So, I mean, what you have when you see these situations is you say they're not going away. Actually, they just begun. I mean, you might not have known Sonos until this. I felt this way about Spotify, by the way. And Spotify is a stock that's always hectored after reports, and then it goes right back up. These are companies that we discovered during COVID, and they are products we discovered during COVID, and they might not have been discovered otherwise. So COVID is showcases for real.
So let's talk about Pepsi. They reported earnings and the company did beat expectations. The company reported strong numbers in both the Quaker Foods organic revenue North American beverage unit. What was your takeaway overall from this report?
It was an excellent quarter, and they raised the dividends 3%. It's a very boring company, a good pastiche of chips, which is just remarkable. I mean, this is Doritos. The growth, these guys have 5% sales and 10% earnings per share. And that is the description of what money is about. It's how money is created. It's a $188 billion company. It's an old company. It's run incredibly well by Ramon Laguarta, and he's accelerated the growth rate. He's not buying back stock because he's got so many growth opportunities. And it's the quintessential thing that I like people to do. I'm spending a lot of time right now going over the Reddit revolution and what's going on with the GameStops and the Tilrays versus what's going up at Pepsi. And I think that your portfolio can have a Tilray. I don't care. You can have Afria. That's fine. Erwin Simon, an old friend of mine from Hain. It's fine. I don't think the cannabis is. We went through the cannabis revolution, and there are going to be a couple of survivors in cannabis because it's not that big a market. People don't want to believe that, but it isn't. But I look at a PepsiCo and I say, listen, that's not cannabis. It's not necessarily hard seltzer yet, but it can be if it wants to be. But what it really is just a very well-run, good company, and you want to own those in your portfolio. You can own the specs. You can own the froth as long as you own a Pepsi.
So I want to end our show today talking about crypto. Mastercard is reportedly going to let merchants accept crypto payments in a year per CoinDesk. However, it's not clear if the settlement will include Bitcoin per CoinDesk source. So Jim, is this move to stay competitive, and can they honestly face up to PayPal?
I don't know. I mean, I was back and forth with Mastercard, got the release this morning. I was gratified. I've been pushing them to be able to do this because it's an actual alert name, and I thought it was really important. The release doesn't make it really clear. If you buy something in Bitcoin, it looks like it goes through in Bitcoin. It's supposed to buy something in Bitcoin, and then it has to be cash, and then it goes back, and then it goes through the system. That's the Visa way. I have PayPal on tonight. I've got to really understand this because the Mastercard release itself was a bit opaque about what happens. It was very glib, I felt. And even though we own the stock, I was disappointed. I really think that they have to come out and explain this because it's such an important thing. Bank of New York's taking Bitcoin. I believe Bitcoin's a great store of value. I've been very pro-Bitcoin. A friend of mine, Max Raskin, has an excellent piece today in the op-ed if people want to learn a primer about Bitcoin and why I think it's so important. A lot of my thoughts are in that Max Raskin piece. He's a terrific kid from Summit High. I've known him for a very long time. And I just think that this is it's a great hedge against what all the central banks are doing, which is why my kids I did, as I mentioned, because I am a big believer in taking out house's money. I took out house's money, and I don't even look at it. I don't care. I don't care where it is. I think it's a great storehold of value. Maybe it's up today, maybe it's not. I don't care. I want to own it.
All right, and with that, Jim, we are going to head on over to our Action Alerts Plus daily rundown show. We actually have some really exciting topics to talk about. We are going to hit more on Mastercard because I really want to get more of your in-depth analysis for Mastercard itself as a stock. But Jim, I also want to ask you specifically about Disney's earnings. So if you're interested, come on over to actionalertsplus.com and join us there. I'm Catherine Ross, and we'll see you tomorrow.